students. In the last video, I explained about introduction to accounting and how to post journal entries. In this class, I am going to explain about the topic called ledger accounting. So in the last class, I clearly explained about the cycle of accounting. The first cycle is we want to prepare journal entries, and second step, ledger accounting. Third step, trial balance. Fourth step, trading account. Fifth step, profit and loss account. And the last and sixth one, we want to prepare the balance sheets. So in the last video, I covered the first step, journal entries. And this video, I'm going to explain about the second step, ledger accounting. So just recap what's the journal entries. So in the simple words, journal entry or journal means it's any recording of any day transactions in any particular book. All the transactions will record in a chronological order. We can call it as a journal entry. We can take example in a business from morning 9 o'clock to or from 24/7, so many transactions will be happen. If they are buying something, they are selling something, they are making some expenses for any salaries, so they are paying electricity bill. So lot of the activities, lot of transactions, cash transactions, credit transactions are happen in any business. So in a journal entries, what it will do means whatever the transactions or happen 24/7, they will analyze the transaction and they will record in a particular book in a chronological order. That is a journal entry. The pro forma of a journal entry is we can observe date column, particulars column, LF column, debit column, and then credit column. This is the short and sweet about the journal entry. In this class, I am going to explain about a ledger account. See, first of all, what is a ledger? So, ledger, the name is derived from any Dutch word ledger, which means keeping or storing. Okay. So here, later, the ledger was converted into any ledger, therefore means a book where the various accounts are kept which have taken place during a given period of any time. See, once the first step of preparing the posting of a journal entries, the managers or an higher authority, they can't able to understand actually what's the business, means where we are making the expenses, where we are getting the income, actually what are the total assets, what are the total liabilities, what's the actual cost or cash flows are happening in the business. For knowing clear cut information, we have any second step of a ledger. In the ledger book, what it happens means here they will open individual accounts for any every aspect. See here, we can take an example as any in our home itself we'll take. So in the previously only father will having only the bank account present. So everyone are having their own individual accounts. Why they are maintaining the individual accounts means, so here the government wants to know actually what's the total expenditure of any households. So the same like this also, if they can maintain the one account, one ledger, they can't able to identify the where expenses are making, where income is getting in. So for knowing the clear cut information, we are having the ledger account. Means ledger means individual accounts. For every transaction or every item, we want to open any individual or any separate account. Okay, let me start. Let me solve this. Let me post any ledger account by using the last previous transaction itself. So these are transactions. These are the 10 transactions or happened in the month of April in ABC Limited. Okay, if you want to know the journal entries, how to post journal entries by using the transactions, means just you can refer the first video. Okay, so this the transactions or happened. and based on these transactions we posted the journal entries. These are the entries which are posted in the last video. So here, see, based we can't directly post the ledger account. We must ensure use the journal entries to post the ledger. Actually, in practice, the transactions are not directly recorded in the ledger accounts. They are first entered in journal and then only are posted or are transferred from a journal entries to the ledger account. So, in another words, the transactions are not recorded directly in ledger and they are routed through the journal. So, first based on the journal entries only we can able to post the ledger accounts. So let me see how we can post the ledger accounts by using the journal entries. Okay, so first of all, in a ledger account, what I was telling that, so in a ledger we want to open the individual accounts. So first of all we want to know, so for every item, we want to open one individual ledger account or one individual account. So first we'll count how many ledger accounts we want to open for any individual items. So these are the items. Cash account is an one item, capital, purchase goods, cash, Raghav sold furniture, sold sale of any goods or purchase, but cash purchase and stamp. These are any items. So for these items, for every item, we will open the one individual account, ledger account. So if the item name was repeatedly, means we want to open that one more account. Whatever the items are similar, we can post in one ledger account. So first we'll open how many, first we'll check how many ledger accounts we want to open. So first account will open for any cash account, and second account will open for any capital account, and third will open for any purchased goods account later, sorry, purchase goods account. And next we won't open for any cash. Why? Because we already opened the cash account as in a first ledger. The first ledger was assigned for any cash. So next we'll open for an Raghava, means accounts receivable. AR means accounts receivable account. Raghava accounts receivable account as in a fourth ledger. And sold furniture account is in a fifth ledger. And cash we won't open. Why we won't open means it was repeated item. So next is a sale of goods account as in a sixth item, and purchases is in a seventh item or in a seventh ledger will open, and cash we won't open. And next purchase of a stamp, purchase stamp account will open as in a ledger 8. So here in this slide we can see we want to open as an 8 ledger accounts. And next drawing account is a ninth one, and cash we won't open. Salary is in a 10th, and rent is an 11, and cash we won't open. Again cash we won't open, and commission it's in a 12th. So here based on journal entries, if we want to post the ledger account means we want to open 12 different ledger accounts. Okay. So actually what's the pro forma of a ledger account? The pro forma of a ledger, it will be look like as an, the left hand side part is a debit part, it denote as a DR, and the right hand side part is a credit part, it denote as a CR. Left hand debit, right hand credit. So here now we'll post all the journal entries into a ledger account. Okay, totally we want to open 12 ledger accounts. 12 ledger accounts we want to open. So first we will open the cash account as any first ledger account. Okay, The cash account is a first ledger account. Here you can observe the transaction was happened on the date of 1st April. The transaction was the cash account, the journal entry was cash account data to capital accounts here. The cash is coming inside into a business. Why the cash was coming inside means some X person was investing his money into the business. So first time the person, some X person was sacrificing his capital. So here the cash account data to capital account CR. Now we will open the ledger account. Now this part is any debit part. This is on a right hand side is an a credit part. Debit, credit, debit, credit. Okay, this account is an a cash account. This account is an a cash account. Okay, so now it's an a cash account. Cash account is an a debtor. Okay, this transaction was happened in the date of any 1st April. See here, you can observe cash account debtor, debit. So left hand side is an debit, so DR, and right hand side is an credit, CR. Okay, so now cash account is an debit, so we wants to write in the debit side, means this side we wants to write. So here the cash is debit, so on the date, which day the cash was coming inside means it's in a 1st April. How much cash was coming inside means it's in a 5,000. See actually why the cash was coming inside we wants to write in the particular column. Reason of any cash was coming inside. So here we'll go with a trick. If you are writing the debit aspect in the particular column, you can blindly write the credit aspect. Okay, the credit will be in the debit side, it will be starts with a 2. Okay, and in the credit side we can start with a by. Means here if you are if you are opening the ledger account for any cash account means in a particular column you can write it the cash opposite one. The cash opposite one is in a capital account. Okay, now you can write as in a capital account to capital account. Okay, thus the one entry. Okay, so next we want to open. See first we will see how many cash transactions are in this journal entries. So first one is in a cash account we posted, and the next one was in the date of 2nd April we want to yet to post. So third there is a no cash transaction, and fourth we having one cash transaction as in a debit, and fifth we having the credit transaction, and sixth we having the credit transaction, and seven we having credit transaction, and the eighth we having the credit transaction, and the ninth and then 10th is a debit transaction. So total in the 10 journal entries we have in the 9 cash transactions. Okay, now the first one was completed. Now we'll see the second one. Second one is a purchasing goods account data to cash account CR. So in the 2nd April the cash account was CR, means credit. So we'll have the cash account. The cash account was CR for the date of any 2nd April. The cash account is any 2nd April CR with an 1,000 rupees, and here the cash was CR means was a opposite one, means was the in debit part. Debit is any purchases, so purchases goods account data. Okay, and next cash transaction we can see on the 4th April that journal entry was cash account data to sale of good account, means the cash was coming inside by selling of a good. The goods are going out, the cash is coming inside. Means cash was coming inside means it is in a debit. So date was happened on 4th. The amount was coming inside was 800. So amount was the cash was coming inside. There was the opposite CR1 means credit one is any. Why the cash was coming inside means to by the sale. So to sale of good account the by selling of any goods the cash was coming inside. And the next cash transaction was happened on the 5th. The transaction means journal entry was purchases account data to cash account CR. So cash account is an CR. So CR cash account CR means we want to write in the it's in a right hand side. So CR. So the amount, the date was on the 5th April. The amount is only 600 rupees. Why the cash was going outside means here the business was purchased some good. That's why the cash was going outside. And the next cash transaction was happened on the 6th. The transaction means journal entry is a purchase stamp account and the cash. So business was receiving the stamps means purchasing the stamp means they are receiving the stamps and they are sacrificing, they are spending their money in the purchasing process. This in this the 6th April they are sending cash means 50 rupees out means it's a credit by purchasing the stamps. And the next cash transaction was happened on the 7th April. So here drawings account data to cash accounts here, drawings account data to cash account. Here the owner was withdrawing the money from business. So business was losing his money means from business the the amount was going out. So going out means it's a credit. So amount was going out on the date of the 7th April. The amount is an 100 rupees. So why it is going out means by the personal use, the owner was using as in a personal. So that's why the amount was withdraw from a business. And the next transaction was happened on the date of an 8th. Here the business was paying salary. If the we are paying the business paying salary means the here business was business was sacrificing this money in the paying process, so they are losing their money. So business was the cash was going out from a business. So this was happened on the 8th. The cash was going out means it's a credit. So credit side we wants to write 8th April. How much amount we are paying as in a salaries means it is in 300 rupees. So why the cash was going out means for sake of any salaries by salary. By salary. And the next transaction was happened on the date of an 9th. Here the business was paid rent means here they are paying the rent means cash was going out. How much rent they are paying means they are paying 200 rupees. So here cash is going out in the form of any rent. They are taking the rent services and they are making the payment for any cash. And the next and last cash transaction was happened on the 10th April. Here the business was receiving the commission means they are receiving the commission means the cash is coming inside. The commission is how we'll get the commission means if the business was providing some services to the client, then only the client will give the commission to any service provider. So here our business was received commission. So on the 10th the cash was received. So how much amount they received? That it was in a 500 rupees. So to commission account. So these are we entered all from 1st April first transaction to the last transaction. Now students carefully listen. Here we want to do the balance. According to the accounting concepts, we want to balance the debit. The debit balance must and should equals to a credit balance. Now in the rough take the rough paper and total the balance, the debit balance and the credit balance. Okay, if you add all the debit balance and the credit balance means you will get the big amount, the big value from the debit side. So now what we'll do means we will balance with a big value, the big amount in the both side. The big amount is a 6,300 rupees and the 6,300 rupees. But here the debit is an a more and credit is an a less. Yes, how much of a differences is there from 6,300 to 2,000 here? If you see the differences means is the difference is an 4050. Okay, this difference amount was why we got how we got this difference means here the debit total is an a big. So for sake here the debit total is an a big and the credit is an a small. So by based on the debit total, the credit total is having this much of any differences. The differences we can call it as any by balance carried on. These balances are happen at the month end. So April end month end date is a 30th April. Okay, and difference amount will forwarded means brought down to the next upcoming months means the next month is any first May. This brought down so to balance brought down for any next month means first May is any the balance amount is any 4050. Like this we want to enter the all the individual items into any one particular ledger account. Now we completed the cash account. Next we'll go with any capital account. See, this transaction was happened on the 1st April. The capital is any CR. The capital account is any CR. Now we will open the second account as in a capital. So second account is any capital account. So capital account is any CR means CR is any right hand side. So this transaction was happened on the date of 1st April. This amount is 5,000 rupees. Okay, amount is 500 rupees. So here the capital is a credit. Why the capital is credit? Why the capital is investing sacrificing by the investor and it was receiving by the business. So business was receiving, so we can make it as a by cash. Okay, so the capital is only one item, the another items are not there related to the capital account. Now we'll go within a balance. The debit balance must and should be equals to the credit balance. The big amount you can see is in a 5,000 rupees and the debit is in a 0. So we'll go with a big amount. The debit is in a 5,000 and credit is in a 5,000. Not debit and credit as equal, but when you see here it was in a 0, it is not 5,000. So we are carrying the 5,000 rupees from credit side to debit side, that indicate as any to balance. We are carrying 5,000 rupees from debit to credit to debit on the date of 31st or 30th April, and this difference amount will post in the next month, will carry forward to the next month as in a bad drawn brought down. It's in a brought down by balance brought down 5,000 rupees. Okay, and the next item, cash completed, capital completed, and next we having the purchase of any good account. So purchase good account is a third item here. 2nd April purchased goods account data. So purchased account goods account data means it comes under left hand side. It's in a debtor. This transaction was happened on 2nd April with the amount of 1,000 rupees. So purchasing the purchase items are coming inside, and here the opposite one is the cash was going. Once the cash will go out, the goods will receive. Okay, and here also we can see only one item, one transaction. So we'll go with an balances. The debit is in a big amount, so balance within a two side, and we carrying the debit balances to an credit. Okay, the to an credit, it's an 1,000 rupees. So here we'll write by balance carried on from debit side to credit side on the date of any 30th April, and this balance carried on will be forwarded in the future, means next accounts it will be any first May, it is to balance brought down, the difference amount is any 1000 rupees. And the next account, the next item, so we are cash is completed. Now we want to open the Raghava is an a personal account, is an accounts receivables. So we'll open the Raghava ledger account. It's an a ledger for an a Raghava account. Raghava account is an a debit. Okay, this Raghava account was happened on the 3rd April. Transaction was happened on 3rd April. So 3rd April, and it's Raghava is in a debit. So we are placing it as any, we are posting on debit side with the amount of any 500 rupees. Here why the Raghava was debiting with an a cash, means he was yet to receiving the money, and now he was selling his furniture. Okay, now we'll go with any balances. The big amount balance within a both side, the 500 is in a big, so balance within a both side. And here in the credit side you can see the different deficit. So we are carry from debit to, carry the balances from debit to credit. So that's part we can call it as any by balance carried on. This balances will be done at the month end, so 30th April, and the whatever the difference is balanced amount will be brought down to the upcoming months. It's in a first May is an upcoming with an a 500 rupees. And next we completed Raghava personal account. Now we'll go with any sale of furniture account. So sale of furniture account was in a credit. Sale of furniture credit, it was happened on 3rd April. So we'll open the sale of furniture account. It just happened on the 3rd. Sale of furniture is any credit. Sale of furniture is any credit. So we'll post on the credit side, means it is in a right hand side. Okay, it's a date was happened on the 3rd, the amount is an 500 rupees. Okay, the furniture was going outside and the cash was receiving from by Raghava was receiving the cash. It's a credit sale, so it was an accounts receivable. Now we'll go with an balances. Debit balance must and should equal. So 500 is in a big one, so we'll balance within both side. And here in the debit side, it is in a zero balances. Now we will carry the big balance into an big amount into any debit side. It's in a 500 rupees. If we carry the amount from credit side to debit side, means we want to write as a two balance carried on the date of any 3rd April. Okay, this carried amount will be in future posted as in a brought down the 1st May by balance brought down 500 rupees. Look, we'll go with the next item. So now we completed cash and furniture. So now we'll sale of good. So sale of the same similar like any previous one, 5th account. Now we want to open the 6th account. 6th account is in a sale of furniture, sorry, sale of any good. If sale of good means it's the goods are going out, going out means it is a credit. The credit means we want to write in right hand side in this part that this transaction was happened on the date of 4th April, and the amount is an 800 rupees. The goods are going out, but the business was receiving the cash amount was receiving. Okay, here, so by cash, so here in the debit it is in a zero item, so we want to balance the big amount will balance in the both sides 800 and the 800. The deficit amount will be carried from credit side to a debit side. Or how much deficit? It is an 800 rupees deficit, so we can call it as any carried on. So to balance carried on the month of 30th April, this carry balances will be open on the new balances as in a next month. So it's in a next month is in a 1st May, the balance is brought down as in a 800 rupees. Okay, and the next account we completed sale of good account. And now we'll go with any purchases account. The purchases account is any 7th ledger book or ledger account. Okay, open This purchases account was happened on 5th April. It's in a debit. Purchases account, and it was in a debit. So we wants to write in the debit side. Purchases means it is in the left hand side. So this transaction was happened on the 5th April. Purchases account, the amount how much they purchased goods means it is in 600 goods, costed goods they purchased. And if the goods are coming inside means the cash will be going out. The goods are come and the cash was gone out. So now we want to go with an balances. Debit balance is equals to a credit. The big amount is in a 600, so we will balance with a 600 on the both side. And here in the credit having the deficit amount, the deficit amount will be carried on from a debit side, the 600, the balance carried on. This will be happen on the end of the month, 30th April. This balances amount will be brought down to the next month opening balances, means to balance brought down as in 600. Okay, next we'll go with an next another item. So now we'll purchases we completed, and the next we having the purchasing of any stamp, purchase stamp account data. So this is an eighth account. Now we'll open. This transaction was happened on 6th April. It is in a purchasing of a stamp is a debit. So purchasing stamp account is any debit. The purchasing stamp debit means here. So date was 6th April and the amount was 50 rupees. So here we are receiving the stamps and we are sacrificing the amount. So cash is going outside and stamps are coming inside. Now we'll go with an balances. Why we want to go means there is an only one stamp item. If we can observe the journal entry another stamp purchase means we can post the another stamp purchase also. Now we are having only one stamp purchasing. So the big amount will balance with both sides. Debit balance is equals to the credit side. The deficit amount will be carried down from any debit side to credit side. It's 50 rupees. The by balance carried on the month of at the end of 30th April. This deficit amount differences will be forwarded to the next month 1st May. It will become as an opening balances to balance brought down as in 50 rupees. And the next one is in a cash we already posted. So here we posted this slide journal entries. Next slide journal entries will the next item is any drawings account. That this transaction was happened on the 7th April. The journal entry was in a drawings account data to cash accounts here. So here the drawings account will open the ledger for any drawings account. So drawing account is any DR. So we want to post it as any debit side. This was 7th April with the amount of 100 rupees. So here the cash is the drawings was coming inside and the cash was going outside. So to cash account CR. So balance is 100 rupees and 100 rupees. And here we are carrying the debit balances to an credit balances. Why? Because credit is an 0. So we are carrying, so by balance carried on at the date of any 30th April. This amount only we will brought down to the next opening month balances. This is the next month is in the 1st May to balance brought down as in 100 rupees. Okay, next we'll go with any next item. Next item is any salary account. So salary account is in a 10th ledger. Okay, we'll open the ledger 10th. So here on the 8th April, the business was paying salaries. So in the salaries paying means the cash is going outside. So salaries account is in a debit and cash is in a going out. It's in a credit. So 8th April salaries account is in a debit. So salaries account is in a debit. We want to write here this date was happened on 8th April with an amount of any 300 rupees. So salaries are going outside in the form of what? Cash. So by cash they are paying the salaries. Now we'll go with an balances. The big amount will balance with an both sides. Debit balance must and should equals to credit balance. The deficit amounts will be a carry down. So this 300 will be carried on from any debit side to credit. This was to by balance carried on the date of any 30th April. And this carried on balances will become as any open balances per 1st May. So open balance will make as in two balance brought down with any 300 rupees. Okay, we'll go with any next item. The next item is any we completed drawings, cash and salaries and cash. We'll go with any capital. Sorry, we will go with any rent. Rent account is a debit. So rent is an 11th account. It has happened on 9th April. Rent account debit. So rent account it is a debit. So this side, left hand side, with the amount of this was happened on the date of 9th, the amount of 200 rupees. So here they are paying the rent in the form of cash. The cash is going out and services or rent services or they are rendering. Okay, we'll go with an balances. The debit balance must and should equals to a credit. The differences amount will be carried on. So here carried on within 200 rupees by balance carried on and the month of end 30th April. This carried on balances will become as an open balance in the next month. The next month is in the 1st April. The opening balance we can call it as an A to balance brought down with the amount of an A 200 rupees. Okay, the next transaction and the last transaction is will completed all. It's an last is an to commission account CR. It's an 12th transaction. So this transaction was happened and the date of any 10th. So to commission account CR. So we'll open the commission account. It's a commission account. It's in a CR means it's in a right hand side. So it's in a right hand side CR. So date was happened on the 10th with the amount of any 500 rupees. So if they are providing the services means there are some benefit was giving to the client, then only the company will receive the commission. So they are providing the services and they are receiving the cash of 500 rupees. Now we'll go with an balances. Debit balance must and should equals to the credit. The difference balances will be carried on for the next means month end as 30th April. It's in a to balance carried on. This differences balance means carried on balances will become as an opening balance for any next month. It's in a 1st May. It's become we'll write as in a by balance brought down. It's in a 500 rupees. Like this we will post all the journal entries into a ledger accounts. Okay, hope you guys you understand well. Thank you.